Let's go live to the trading desk. Victor Adair awaits me now. Victor, I bet you're happy that we're getting into September, by the way, because you sort of get out of that quiet August. I was talking to John Johnson about that, I'm not sure what to make of anything, with those low volume numbers in August. Now we finally get to some action coming up in September.
Yeah, we get the real thing coming up here. And Mike, but I just love your expression there about phony markets just a few minutes ago. Mm-hmm. And I think there is some of that. But let me frame it in this sense. I think the markets right now are way more fragile than what the sort of price action we've been going through here in the summer would imply. And by fragile, I mean that market psychology, and that's something I talk about a lot, but market psychology is, kind of just how things show up in the market, how people position themselves, whether or not they want to do something. For instance, you and John Johnson making reference once again to this thought that there is no alternative. You have to be in the stock market. You have to reach for yield, that sort of thing. Well, I think, though, market psychology knows, that it understands that the world as we know it now is at risk of a dramatic change on a number of fronts. We can go with underfunded pension funds, demographic changes, technological change, whatever, all kinds of things. But because there is no alternative, you just kind of got to keep going along with the game and hope, that you could get out or grab a seat, when the music stops. So I think that's what I mean by fragile. I think risk has been seriously priced, increasingly underpriced, I should say, in the market. And I think we're going to get some rock and roll as we go into the fall.
I think that's a great way of putting it, though, Victor, is that I feel what you're just expressed. I feel that risk factor. I feel that fragility. It's just, that it's kind of a house of cards to some degree when you have that level of debt build up there, when you've got that level of manipulation. I just alluded to the Japanese banks, pension fund, the central bank. They can't get out of the market. They're in, but they actually have no exit point now. They're stuck being in there. And that, longer term, that just isn't healthy for a market.
So, there is this sense, I think, by veterans that are around in the market that, we're kind of whistling past the graveyard. But here's another perspective. Markets are always changing, and it's our job, not to necessarily forecast exactly what's going to happen, because you can't, but you just try to, figure out as best you can and take some positions. So what I'm doing in my short-term trading accounts, and I like to stress that because my short-term trading accounts are maybe a few weeks to a few months. That's kind of my time horizon as opposed to longer-term savings. We've got some initial positions. In other words, we kind of got our toe in the water. We like the U.S. dollar. We're bearish on commodities. So I'm long the U.S. dollar index. I'm short Canadian dollars. I'm short Australian dollars. I'm short gold. And I'm short crude oil. And this past week, I've initiated some initial positions where I'm short the U.S. stock market. These are just trades. If what I think as we go into the fall, John Johnson was talking about maybe a short-term correction. If we have some action in the market, those trades may work out. If they do, I hope I can, step up and add to my positions. If they don't work out, then I get out of them.
Vic, we only got about 30 seconds. I want you seriously to reiterate what you've got on right now again. That's okay. A lot fast and furious.
I'm bullish the U.S. dollar. I'm bearish commodities. So I'm long of the U.S. dollar. I'm short Canadian dollars. I'm short Australian dollars, short gold, short crude oil, and I've just taken some short positions in the American stock market.
Great stuff as always, Victor. Go out and have a terrific weekend.
Thanks, Mike.